it's nothing about AI here. It's a simple slide, some ideas that I put together, which make sense in a sense that um, if you look at organization today to grow from a CFO, I look at three key elements or three major points or three different lenses, right? One is about capital, because most of the organization, we need capital to raise the organization, to grow the organization. The other one is performance evaluation, how to evaluate your business to see if you're going well. We all know that's ups and downs. You have to make adjustments. And the third angle is about risk mitigation. Regardless, what business you are in, we're going to face risks, how to potentially mitigate them. And of course, internally as well, process and controls. So if we start the first one, capital strategic decision. So some companies, as a matter of fact, I have a client in Florida right now that's doing quite well. There's no debt there, but it's the exception. So most of the companies, we need to raise capital, okay? So point number one, we decide to raise capital. Why do you need to raise capital, right? So point one, yes, we need to raise capital, but why? So we need to evolve. We need to become more competitive. We need to enforce, in a sense, that be more efficient, effective. Number two, when you raise capital, where are we going to invest the capital into? So we got to make sure that we're going to align with the organization long-term growth plan. We got to make sure that we're going to invest the capital on the expertise the company has to deliver the best value. Another 3 point is about the corporate finance perspective. When you raise capital and you discuss with the leaders to say, okay, we know what we agree that we're gonna raise capital. We know that we're gonna invest the capital into the expertise we have to deliver the best value. But once we have that in place, and we're gonna raise capital via debt or via equity, we're gonna calculate the WACC, the weighted average cost of the capital, to see the cost of the capital there. And then I'm going to look at the projections, sales, the cost, the expense, the CCA, the depreciation. You're going to take the tax back. You're going to add back the depreciation. You're going to have the free cash flow. And then I'm going to calculate the NPV. The positive, the higher, the better has to be. We have to calculate the IRR, internal rate of return, which has to be higher than the WACC. And we have to calculate the payback time. You may say, Alex, you have all the key elements within that calculation. Yes, but the three most important are NPV, IRR, and payback time. And of course, you have to look at WCC first. So once we have the green light to say, yes, we raise the capital, we know where we're going to invest the capital into, we got the green light from the corporate finance perspective, all good to go. Yes and no, because we got to look at resourcing capabilities. It's not just about capital. It's not just about our ideas. It's about, do we have the people? Do we have the technology? Do we have the physical assets? We have access to capital all the time. Resource capability is crucial for the company to lead, to be successful there. And the fifth point is, you're going to raise capital. We're going to raise $100 million to invest in a new project. What potential risks we're going to face from that perspective, right? So raising capital is crucial. It's, in a sense, helps the organization to be successful there, but they have key elements in order to validate before we proceed. And then we move into a second angle here, which the performance growth, or we call the evaluation, is. First one, we're going to look at the balance sheet, number one. We look at the shareholders' equity. Are we building a stronger asset to the organization, right? So you can look at some key ratios there. You move to the P&L, we're going to look at sales. Sales can look at the gross margin by line of the business. If you have different line of business, you look at the expenses, you look at the bottom line. And then you can have some nice dashboard KPIs. You can look at the cash conversion cycle, how to manage AP, AR, inventory. Again, depends what you do, what you offer, what you sell. You can have key ratios there, or key scenario analysis reporting that evaluate your business performance. So from that perspective, you look at the results, as I said, balance sheet and so on. You can be able to look at, yes, we are doing quite well, maybe not, and ups and downs, you have to make adjustments every single month, right? So that's crucial to look at those results. But remember, the balance sheet, the P&L, the cash flow, it's about the results for actions, decisions that have been made in the past. So in order for you to be successful and to align with the strategic decision, you raise the capital. You invest along the next few months, next year, you're going to be invest that capital to implement the strategy plan there. We're going to have the CapEx in place. And then technically speaking, it should be raising the sales, will become more efficient, which everything's going to reflect on the P&L back. And then again, you can look at your budget, your results, you can look at your forecast, and we're going to talk about forecasting a little bit more. But beyond the financial evaluation, you're probably going to look at and say, technology, do we need any investment, enhancement in technology? Right? New versions of applications, patch or AI, how can we be successful, implement AI, which AI tool you're going to be able to be successful, training people how to use AI. It's not just about AI. People has to be successful using AI, implementing AI, and take the best out of the AI solutions we have, right? So technology is crucial. You move into the operations. What does the operation need? Again, depending the business you are in, what does the operation need to be successful? Is about technology, is about machines, equipments, is about the warehouse, about the fleet. What do you need from the operation perspective to support the sales side? And then you move to the sales side, you're going to look and say, yes, does the company need a new sales or adjust the sales strategy? Do we need a branding? Do we need a marketing strategy there? How can we be successful? Do we need training, right, for the people in sales? We can be the best CFO. We can have the best operations, but sales leads the growth of the organization. So we have, as an organization, as a leader to support, not just the CFO to say, yes, here's the results, but how can we support, as an insightful person, the operations leader and the sales leader, along with the CEO and the strategy plan to be successful there, right? So you look from people training, investment in people, investing in technology, make any fiscal assets, any investment in the operations side, and also on the sales side to be successful. When you look at, for instance, if you look at sales, you talk about pricing, but then you have to go about costing, and then you may have to look at the suppliers, right? So that's from the internal perspective. If you go from external perspective that you have to look at also is suppliers. Do we have any concern about suppliers? Because supply is gonna supply you with whatever you sell, right? So you're gonna have cost there. It's offshore, near shore, is a local supply. Is there any concern with our supplies? Can we replace supplies? What the power of bargain with our suppliers? And then you have the competitors. How do we position ourselves against the competitors? When I talk about competitors, about how do we position ourselves? What can we do better than anybody else, right? So what can you do that nobody else can? That's about strategy there. And then if you move from this perspective about clients, so do you talk to your clients? What's the feedback? What the value you have, talking to your clients? That's crucial as well. For overall perspective, it's not just about the financial statements. It's a connection between the sales, the operations, the strategy, the CEO, and then also externally, we look at the suppliers, the competitors, and the clients as well. And then if we move to the risk management side, which involves processing controls as well, we're going to look at political risks. When I say political risks, legislation, regulation, we look at economic risks, we look at interest rates, inflation, access to banks, we look at the social culture, depending on what you sell, where do you sell, we look at the technology, we look at the legal, we look at the environment, any factors that can reflect positively or negatively to your business. And when you look at negatively, how do you overcome that? And then also you look at suppliers, you look at competitors, you look at clients, you look at new entrants, right? So depending on the business you are, every single year you have new competitors coming in, right? You look at substitutes, or companies that sell similar products to yours at a much lower cost. How are you going to navigate that? Where are you going to position yourself? You're going to position yourself as a high end or low end, right? So exactly, it's about looking at all the data, the variables you have within that environment, and say how can we position ourselves here and be successful. So with that slide again, there's a lot embedded in that slide. We can do a 4 hours workshop there, but that's the key elements what I look at from that perspective.